You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 7th day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. And I know you're really glad that Michael will be back with us in the saddle today's Friday, Monday morning. Business as normal. We'll have a normal week next week. Again, I want to say, Michael never took a really true vacation since 2008. He's gone away a couple times, but always took his laptop with him and plugged into the hotel Wi-Fi, or whoever he might have been staying with. But the live training room, since 2008, this is the first time it has not functioned as normal. So I know everybody will be glad to have him back, and I'm going to encourage him to take at least one vacation every 6 months. I hope it's been a good time for you, if you remember, because when you're trading and listening to Michael's commentary and doing what he's doing, it might seem like you know how to trade. But then suddenly, without his voice in the picture, questions arise that normally don't, because he's telling you what's happening. He's telling you what's probably going to happen next, because he knows how to read a chart, and he's preparing you for the next long or short entry. Some of you have discovered this week you have abilities you didn't even know you had. That's a good thing. On the other hand, some of you this week have discovered that there are some things you still need to learn. So at the beginning of the week and all through the week and in the discussion group, I've encouraged everyone, make a list of those questions. Now, Michael won't be able to answer every question from everybody on Monday, but knowing Michael, he will try. Okay? So pace it. He'll be booking some mentoring sessions next week, so you will get your questions answered. But the most important thing is that now you've discovered not only what you know, but you've discovered what you don't know. And for many of you, that is the missing piece of the puzzle. So he's still got, I guess, another day. He and his beloved Jada, I guess they're coming home Sunday, because he did say he would be here Monday morning. So anyway, guys, I hope you're not tuned in right now. I hope you're out surfing or windsurfing or just leaving footprints in the sand or whatever it is you've done. We'll be excited to hear your story. Whenever he goes somewhere, he always comes back with an adventure story. I have taken a couple weeks off since 2008. Sadly, the first time was when my mom passed, and the second time was when my dad passed. So one of these days, I won't take a real vacation. Really am. Okay. Anyway, Happy Friday. Everybody's been working for the weekend, and here it is. Hope you make the best of it. Now, on a normal week, like next week or last week, we do 2 live broadcasts every trading day. The first live broadcast is the live training room. That's private. It's reserved for members only and those who are taking their 1-week free trial. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, this one's open to the public. That's everybody everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you in to our platform. The benefit of that is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live, wherever you are. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember, youtube.com/CFRN, Christian Financial Radio Network. But you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, it allows you to see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. Yeah, but just, pick some at random. Jump forward a couple years. You get the idea? Yeah, just get a feel from whence we came to where we are now. It has been quite an adventure. And many of you in this audience have been with us since the beginning. CFRN launched in the spring of 2005. I guess this April will be our 26th anniversary. Did you do the math right? No. From 2005 to 2025, that's 25 years. Okay, so, no, it's not. It's 20 years. All right, so we're closing in on 21 years. All right. I probably screwed that math up too. Maybe I should buy a calculator. I hear they're very inexpensive now. Did you know when the first calculators, pocket calculators, came out? Man, were they expensive. It's incredible. But now you can get one at the dollar store. And you don't even need a battery. It's solar powered, but it'll run off if you're in a room that's got the lights on. Bingo. My, the times they are changing, aren't they? Chris, yes, Texas Instruments. They launched that first pocket calculator. Okay, if you have not taken, I mentioned that the first broadcast of the day, the live training room, that's reserved for members only and those taking their 1 week free trial. If you have not taken your 1 week free trial, go to mytradingiq.com. At the top of the page, it says 5-day free trial, no credit card required. Last time I looked, there was a purple button. I think it says click here or something to that effect. Do that. Fill out the registration form. Make sure you include your TradingView user ID, and we'll get your indicators up and running, and you'll get 5 consecutive trading days, not only in the live training room, but you'll have access to everything a passport holder has access to. In fact, we treat you just like a member. For 5 consecutive trading days, no credit card required. We don't want you worrying about the money because we want you to have a clear head so you can focus. And at the end of the 5 days, you'll be able to make a well-informed and intelligent decision if this is how you want to earn your living. mytradingiq.com. Now, Valerie or Michael, change the link and the password every week. I'm not positive if Valerie does it or Michael does it, but let me suggest this. Wait until tomorrow to do it, okay? And then when Michael gets home, probably late Sunday night, he'll get your indicators enabled on the TradingView platform, and then you'll be ready to experience your first live training room Monday morning, okay? The link that's out there right now might still be the link for this week. I don't know if Michael or Valerie has changed it yet. Tell you what, if you go there and it says the password is vacation, well, guess what? It hasn't been changed yet because that was this week's password. I guess I can let the cat out of the bag now that the week's over. All right. So this will be another abbreviated broadcast, although yesterday's abbreviated broadcast ran almost as long as a normal broadcast. Sometimes you just get in the zone, I guess. All right. So this is our daily schedule every afternoon. But these 2 pieces, the Michael part, that'll be back on Monday. So let's get into our daily devotional. Now, we just finished a 7-day study on dealing with complicated people. Now, a complicated person can be someone in your life, or it can be you. I hope you got that out of the study. But today we begin a new devotional topic: no regrets. This is day 1 of 5. Today's scripture is Romans 1:18 through 17. I'm going to share it with you from the Message translation. It's news I'm most proud to proclaim. This extraordinary message of God's powerful plan to rescue everyone who trusts Him, starting with Jews and then right on to everyone else. God's way of putting people right shows up in the acts of faith, confirming what Scripture has said all along. The person in right standing before God by trusting Him really lives. Again, Romans 1:16 through 17. Radical life change. You ready for that? I hope so. This life is a journey, and it is one that can be snatched right out of our hands. When my life looked as if it would be cut short, I remember thinking, there are so many things I want to do for the Lord, and I haven't completed my work. So I want to ask you, if your life were being cut short, what would you think about? What would you want to get done? Trust me, your vision will change when faced with the possibility of not being here. You'll want to finish things. You'll want to take care of those things that have been put on hold because of time constraints or just because there has been a lack of correct priorities. What is your priority? If you're not saved, then your priority should be salvation. That's got to be at the top of the list. You've already ticked that box. Okay, fine. We also, and that made it sound trite. Salvation is not a box you tick. It alters eternity for you. Now we also have to think about all those people we know who are refusing to serve God and how utterly empty their lives really are. They may look on the outside as though they have it all together, but on the inside, they're dead. They got the big house, they got the fast car, they got the boat, they got the trips around the world. But you've heard it said, you can't judge a book by its cover. The same is true with people. Some of the wealthiest and most important people that I know in my life, have known in my life, were some of the most troubled, sad, and discouraged individuals. And I've asked them, I go, what do you mean you're having a bad day? You have the resources to do anything you want, buy anything you want, go anywhere you want. What's up? And it always comes around, eventually, to the fact that they don't have a personal relationship with Jesus. Again, they may look on the outside as though they have it all together, but on the inside, they're dead. If you are saved, then your priority, this will be the second box you tick, should be helping others become saved by sharing with them your personal story and the message of the gospel, the death, burial, and resurrection of Jesus Christ. So over the next 4 days now, I'm going to talk about intentional living. Salvation is the first step in living a life of no regrets. Share your life's story. It can open hearts to receive the truth. See, somebody might look at you and go, man, that dude's got it all together. Shoot, I could never be like him. But he doesn't know that 20 years ago or 30 years ago, you were a drunk, a crack addict, a wife beater, whatever. Then you found Jesus. And by following Jesus, the course of your life changed. You see, those who don't have that personal relationship with Jesus, they need to hear that story. Wow, that would be very embarrassing. What would be worse than embarrassing would be to allow someone to spend eternity in hell because you were too prideful to share your story. Your past, if it's bad, let it become a badge of courage. Okay? Put the light up on the hill where it belongs. A true God encounter will always result in a changed life. So I encourage you with every fiber of my being, share your faith whenever you can. The rewards are eternal. Let's pray. Heavenly Father, thank you for the power of the gospel, which brings salvation to all who believe. Help us to stand firm in faith, never ashamed of your truth, but boldly proclaiming it with love and confidence. Strengthen us to live by faith, trusting in your righteousness and grace each day. May our lives reflect the hope and salvation found in Christ alone. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Friday. Well, let me give you the numbers from around the world. You know it's not going to be pretty, but... And we go to the charts, you're going to really... I'm sure you've already seen it, but... Anyway. Let's just do the numbers. Starting here in the U.S. with the cash markets, or the indices as they're called. The Dow's down 306 points. NASDAQ down 225 points. That's 1.25%. S&P 500 down 53, almost 1%. Russell 2000 down 26 points, well over 1.25%. And I mentioned the Dow down 300 points. We are on the cusp of potentially the worst week in the markets in nearly 2 years. But have faith. It's always darkest before the dawn. And after 4 years of mismanagement, you can't change the world in a month. But you can make some pretty good progress. So, again, I said this yesterday, I've said it for years, I'll just say it one more time. Investors, just sit tight. Okay? You probably feel like just dumping your whole portfolio, because we're going to zero. Well, I'll be honest, individual stocks can go to zero. But the indices never will. It's how they're designed. It's such an elegant philosophy behind the indices. The Dow has 30 stocks. The S&P has 500. Russell 2000. Well, the name kind of gives it away, doesn't it? All of the indices, there are certain qualifications to be included in an index. Standard & Poor's is behind the S&P. Others are behind some of the other indexes, but they're all based off this elegant theory. You have a fixed number of stocks, and when any one of those stocks becomes a non-performer, they miss their numbers, their outlook expectations aren't good, etc., they ask them to exit stage right. And then stage left, they bring in a brand new bullish company that's breaking records, overcoming analyst expectations. So they're constantly shuffling the deck, sweeping out the bad, bringing in the best, sweeping out the worst, bringing in the best. So yes, if you own an index fund, you'll go through drawdowns like we're going through right now and have over the years. Look at what happened in 2000. Look at what happened in 2007. Look at what's happening right now. Over time, the indices will always go higher. Period. So, if you know someone in their 20s, or maybe someone just graduating high school, the best thing in the world you could do is introduce them to an S&P 500 index fund. Maybe seed it with whatever you can afford. And then encourage them on a weekly basis. If they can only add $10 every week, 100 would be better, of course. And as they grow in their chosen career, whatever it is, they should up that percentage. If they do that, they don't ever have to fester over buying individuals, trying to be a stock picker, trying to fix the trying to figure out who the next, home run hitter is going to be. When price is up, you get less for your money. When price is down, you get more for your money. But you're averaging it out. Wherever you are in life right now. Now, for those of us who are of the older generation, okay, we didn't get that advice, and we have to be a little more focused, many of us, on active trading, because we don't have the benefit of time. But see that young person? Imagine if you at 21 had opened an index fund and had put away, $20 every week. You can go to the charts and figure out for yourself where you'd be right now. It'll blow your mind. So, I'm sure everyone in this audience has someone in their life who needs that advice. And then stay on them. When you see them at Thanksgiving, if you don't see them every week, if they don't live in your house, stay on them, stay on them, stay on them. See, I grew up with this warped philosophy that I would never live to be 30. I don't know why. I guess I thought I was James Dean, only the good die young. Die young, leave a beautiful corpse. I don't know. But then when I crossed 30, it was like, I didn't think this was going to happen. Then pretty soon you're 40, then pretty soon you're 50, then pretty soon people bring up your birthday and you're like, would you just leave me out of your conversation? I'm serious. You can impact someone's financial future for generations by sharing that advice with them while they're young. Just tell them, just hand them a gift. It could be an envelope. Okay? All you gotta do is explain what I just explained. It's so simple. It is so simple. In fact, my old, dear departed radio co-host John, he had a philosophy. Every child born in America, the government. I know, it's kind of hard to trust these guys, but anyway, every child born in America should be given an S&P 500 index fund seeded with $1,000. So as they're growing up, even without touching it, they're gonna make money. And when Grandpa or Grandma or Aunt Ethel gives you $100 on your birthday or at Christmas, you can maybe spend half of it on toys and put the other half in that index fund. John's point being is if the government did give every newborn an S&P index fund seeded with $1,000, we would never, if that person never added a dime their entire life, there'd be no need for Social Security, no need for Medicare, no need for Medicaid. Because over time, the markets are always gonna go higher. And just when you think they can't go any lower, they do. But eventually, the tide turns. Look at any index fund on TradingView and go look all the way back to the beginning. Put it on monthly, or I don't know if they have annually or not. Every single one goes from the bottom left-hand side of the screen to the upper right-hand side of the screen. And yeah, you can see the dips along the way. But what do you care? Because you know it's always going to go higher over time. All right, sermon over. Oh, this cracked me up. It popped up on my phone earlier. Now I missed it. Oh man. Can he recall it from memory? No, I don't think so. CNN. You may have heard of them. Stunned by shocking poll numbers showing public support for Doge cuts. Their heads are literally exploding. What? We can't spend $6 million on transgender mice anymore? Oh, this ain't America. I'm going to move to Mars. They never move. They always say they are, but they don't. Anyway, let's go. All right. I'm going to stop pontificating and just do the job here. Crude oil up 74 cents, trading 67.09 last. It's a gain of a little over 1%. Gold down $11.70. Ooh, make that $12.30. Trading 29.14.30 last. Silver down 69 cents, trading 32.64 last. That's a drop of a little over 2%. But for those who took that short silver alert, well, maybe you're smiling. I don't know. In the Asian markets at the close, the Nikkei fell 817 points. 817 points. That's over 2%. Shanghai down 8. Hang Seng down 138. In the European markets at the close, FTSE down 3. The DAX down 410. That's 1.75%. The CAC down 76, almost 1%. So, we had a red day in Asia. It was a red day for the UK. And it's a big red Radio Friday here in the US of A. Oh, and breaking, Powell says Fed is awaiting greater clarity on Trump policies before making next move on rates. Ah, so that'll become the blame game. Okay, we're all accustomed to that. Markets go higher over time, and if you're saved, you go to heaven. Oh, what else do you need to know? Well, I'll tell you. Okay, tariffs. Wouldn't be news if it wasn't a tariff about the tariffs, would it? A broad tax on imports from Canada and Mexico was reversed yesterday by President Donald Trump, extending until April 2nd a 25% tax on goods coming to the U.S. The decision comes less than 48 hours after levies were placed on goods coming from both countries. U.S. officials have framed the tariffs as leverage to compel both partners to enforce border security, crack down on the flow of illegal drugs like fentanyl. Critics have argued the rapid changing of taxes on a wide range of goods prevents long-term planning by manufacturers. Total trade between the three countries is roughly 1.8 trillion, with 680 billion in 2022 coming from U.S. goods exported to other countries. Lady Gaga released her seventh studio album, Mayhem, early this morning, making her return of pop music with her first solo album since Chromatica in 2020. The album features 14 tracks and is described as a blend of her signature pop sound with a modern twist. Mayhem will serve as the official soundtrack for ESPN's 2025 Formula One season. This lady, and I use the term loosely, is a 14-time Grammy winner and an Oscar winner for Best Original Song. She has sold 28 million albums and 140 million singles globally, with her Monster Ball tour holding the record for the highest grossing debut headlining tour. And if I had a child, would I allow her to babysit? You know the answer. I just thought I'd throw that in there because the world is still, well, they still carry in that handbasket. Okay. The impact of the U.S. government's efficiency drive is slowly beginning to show up in labor market data. Now, again, some people seem surprised. Hey, the new president said he was going to make the world great again and America great again. Well, after 4 years of mismanagement, you got to do some house cleaning. Federal government employment fell by 10,000 in February. Now that's according to the data released by the Bureau of Labor Statistics, a decline from the 9,000 federal jobs added last month as Elon Musk's Department of Government Efficiency continues to pare back the size of the federal workforce. In total, government jobs contributed just 11,000 to the total non-farm payroll gains of 151,000 seen in February. This is down from the upwardly revised 44,000 government jobs added in January and the roughly 38,000 average monthly gain seen throughout the course of last year. Well, some of those people, no doubt, were hard at work on those transgender mice. Your tax dollars at work. Tesla has lost just less than 35% this year. It's down a little over 2% today. And this slide has prompted Wedbush analyst Dan Ives, one of the electric vehicle maker's biggest bulls on Wall Street, to issue a forceful defense of the stock, doubling down on his bullish views during what he calls a gut check moment for the Tesla bulls. In a note to clients published late yesterday, Ives wrote, "The time has come to defend the stock, with Ives adding Tesla to the firm's best ideas list and reiterating their outperform rating and $550 price target on the name." The call comes after Tesla stock almost 6% yesterday, with others on the street saying CEO Elon Musk's controversial association with the Trump administration was clouding sentiment on the stock. There have been a number of times in the Tesla story over the past decade that negative sentiment and street worries have overshadowed the narrative of this unique, disruptive global tech story, Ives wrote. From the white-knuckle production moments in 2017 to 2018, to financing worries to the Musk Twitter soap opera in 2022, and now here again, Tesla bulls find themselves with their back against the wall, facing global negative sentiment around Musk, Doge, and the Trump administration. Ives holds the highest price target for Tesla among the 48 Wall Street analysts tracked by Yahoo Finance. On average, Wall Street analysts have a $346 per share price target on the stock over the next 12 months. Shares closed yesterday at $263. I own no Tesla. Intuitive Machines, which trades under the symbol LUNR, Lunar. Intuitive Machines Incorporated shares sank after it ended a lunar lander mission early following a flawed landing, marking a second setback for the company after suffering a similar problem last year. Maybe some of you guys were watching the live feed yesterday. I was watching it, and then I had to go. Dan asks, for your service, how do you mentor traders? Can you give an example of how you've done it to traders in the past? You book a mentoring session. Once you become a member, you just book a mentoring session. And we go over whatever it is you need to know, whatever it is you don't know. You have 2 hours every day in the live training room to ask all the possible questions you can. And then the Thursday night workshops for 2 hours. But if you want to meet personally with Michael or myself, or Bert, or Valerie, then you just ask. That's all. It's very simple, Dan. Done thousands of them since 2008. All right, back to Lunar. It's down 94% on the session. The most recent lander, called Athena, launched into space on February 26th and touched down on the moon's surface yesterday. But Intuitive Machines said the craft landed on its side, 250 meters or 820 feet from its intended landing site. With the direction of the sun, the orientation of the solar panels, and extreme cold temperatures in the crater, Intuitive Machines does not expect Athena to recharge. It said the lander was able to accelerate several programs and payload milestones, including some for NASA, before its batteries ran out. Down 22% on the day. That's what I'm showing here. I've got LUNRW down 94%. I've got LUNR down 22%. So we'll see. The off-kilter landing attempt came just 4 days after another Texas-based company, Firefly Aerospace, successfully landed its first commercial spacecraft on the moon's near side. Both lunar spacecraft from Intuitive Machines and Firefly are partially funded by NASA as part of the U.S. agency's ongoing efforts to jumpstart the development of commercial spacecraft that can deliver tools and experiments to the moon's surface. And let us not forget those 2 astronauts still stranded at the space station because Biden wouldn't let Elon bring them home, because that would look like he was siding with the enemy. Fact check it, please. Americans are feeling worse about the housing market as mortgage rates stay elevated, according to Fannie Mae's latest survey of consumer attitudes. Yes, Dan, in the workshop on Thursday night, you can ask all the questions you want. You can type in your question. If you want the microphone to ask a question, we'll open up your mic for you. Okay? You're very welcome. Great question. Okay, 30% of respondents polled by Fannie Mae now expect mortgage rates to fall in the next 12 months, down from 35% in January. 33% see mortgage rates rising, and 36% think they'll stay the same. Those shifting views helped the Fannie Mae Home Purchase Sentiment Index decline 1.8 points in February to 71.6. It notched its first year-over-year decline in nearly 2 years, falling 1.2 points from February of 2024. From Bloomberg, a roller coaster week for markets. It is ending on the same note, with stocks almost wiping out losses on news that Russia is willing to discuss a temporary truce in Ukraine if there is progress towards a final peace settlement. We'll see. We'll see. I think not. The euro is set for its best weekly performance in 16 years after Germany's historic pledge to ramp up spending for defense and infrastructure. The currency rose as much as 1% today, its strongest level in 4 months, taking its surge in the week to almost 5%. Options volumes in the euro-dollar pair hit a record high on Wednesday, according to data from the Depository Trust and Clearing Corporation. Those are the ones who allow naked short selling to happen, with bullish wagers accounting for 70% of total demand in the week versus February's average of just over 50%. And last, Reuters says that Federal Reserve Bank of New York President John Williams said, "So far, there is no evidence that inflation expectations are starting to run into any form of trouble. Based on recent data, there is no sign of inflation expectations becoming unmoored at any forecast horizon relative to the pre-pandemic period." Well, This whole thing about the eggs, stop killing the chickens. Goodness. Williams, who spoke earlier this week in comments that highlighted no near-term need to change the current setting of monetary policy in an environment where trade tariffs may add to future inflation, did not comment on the monetary policy and economic outlook. His comments came in reference to a paper presented at the conference. So there you have it. All the depression I can stomach in one setting. So let's bring it home. Logic 247. That's our 24/7 around the clock E-mini alert service. Not just E-minis, also crude, gold, silver. Over the last 344 weeks, we've issued over 19,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure, and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 39 alerts. Now that's when Valerie did the recap this morning at 7:30 a.m. Eastern. I threw a couple of additional ones out since then. So we'll have a total just over 40 for the week. At the time Valerie did the recap, we were still waiting on the outcome of 10. Some of those have probably been resolved. So at the time of the recap, we had 29 actionable alerts, of which 5 or 17% would have been stopped out, again based on market structure, and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Every logic alert has an entry price, an initial target that's designed to help you get your goal for the day, quite often additional targets, and then of course a final trade to target. The purpose of the alerts is to teach you how to read a chart. It's just like every day on this afternoon broadcast when we go through the markets and I point all the different things I point out. That's exactly what those logic alerts are pointing out. Okay? And so whether you trade them or not, use them while they're available to learn how to read a chart, because you're never going to become a trader, a consistently profitable trader, until you learn how to read a chart and know with a high degree of certainty what the next high probability move is. Nobody knows what's going to happen next in the market. I don't care how many lies they tell you on their website and their emails, whoever they are. There's thousands of them out there, tens of thousands. But we tell you the truth. Nobody knows. No algorithm is ever going to resolve it, no indicator, no oscillator, because there's too many factors. And each player, retail or institutional, has the freedom to place an order or pull an order. Going to be a lawyer, you got to be able to read the law book. Going to be a doctor, you got to be able to read the medical textbooks. You're going to be a trader, you got to be able to read the chart. Well, gee, they didn't teach us that in school. No, they taught you how to read words and sentences and paragraphs, right? But with the markets, if you're a technical trader, it's a whole different world. It's a different kind of reading. It's understanding how price flows. It's understanding what important prices and important areas are. It's understanding that important prices and important areas are almost always tested. What we've proven over 344 weeks and over 19,000 individual alerts is that 20% of the time, the market is not going to do the next high probability thing. Now, we could have driven ourselves crazy trying to figure out why or how can we beat that, or how can we make it. Are you kidding me? 80% is a huge number. It's such a huge number, I don't even use that number. I use the other number, the smaller number. 344 weeks, 19,000 alerts, 20% or less stopped out on a weekly basis. And that, as soon as a week's finished, that information, that data becomes part of the public domain. It's all there. Okay? So if you're chasing the Holy Grail, spending all kinds of time and treasure looking for the next great thing, why don't you just stop, learn how to read a chart, and become a trader? The only way to become a trader is to learn how to trade. There's no secret, there's no magic bullet, and as I said, no Holy Grail. The only Holy Grail in trading is learning how to trade. And in order to learn how to trade, you got to learn how to read the chart. Period. It really is that simple. Okay? Trading's not easy. Never has been, never will be. But it can be simple. Okay? Now, the logic alerts go out quite often hours, sometimes days before they actually trigger. How is it possible that someone could hand you a trade hours before it happened, or potentially days, and then it triggers, and then it runs to the target? It's not magic, it's not voodoo. It's simply reading the chart. Looking at a chart, along with our humble set of indicators, and knowing where to expect the next major resistance, the next major support, and finding the windows of opportunity in between. Now, the logic alerts come out around the clock. They can come out at 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So you can use them as they're intended or not. There'll come a day you wish you had. All right. So we'll see. We still had 10 waiting when Valerie did the recap. Plus I put out a couple more this morning. So this afternoon she will, or tomorrow morning, she'll finalize for the week. We're sitting at 17% stopped out right now. You know, we've had weeks of zero. We've had a couple of weeks above 20% over the 344 weeks of Logic 247. So whatever it ends up, that's how it ends up. So we'll see. It'll be posted in Telegram this afternoon or tomorrow morning, as she does every day. Okay. Now, once upon a time, long before we envisioned Logic 247 and the change that it's made to so many lives, we had our original alert service, the concierge trade alerts. They don't come out around the clock. They're published shortly before the Globex open each evening, but some evenings they're published shortly after. Now, for years and years they were published shortly after. But a couple months ago I started toying with the idea of publishing them right before the open. Today's a Friday session, but it began last night at 6 p.m. Eastern. The Monday session will begin Sunday night at 6 p.m. Eastern. Now, Wall Street traders go to work Monday morning, 9:30 a.m. Eastern. We go to work Sunday night, 6 p.m. Eastern. Many of our members get their goal for the day Sunday night. They can sleep in on Monday if they want. Now, last night, in fact, I think Thursday, Wednesday, Sunday, I think Sunday night was the only night I didn't, and usually on Sunday nights I probably won't get them out before the open. I'll get them out shortly after. But Monday, Tuesday, Wednesday, and Thursday. That's a whole week. So out of 5 days, I'm going to get them out 4 days, 5 minutes before the open. So all members, all trial members had all these targets 5 minutes ahead of the open. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. 5 minutes ahead of the open. So let me go to the charts and just blow your mind. We've been talking about this most of the week. Here, can I scrunch? Yeah, there we go. We talked about this at length yesterday. The 50% fib retracement of any stock, any index, anything. A 50% fib retracement on the daily chart, okay, will almost always give you a nice bounce, okay. Now, not only did we have the 50% fib retracement, we had a bullish cross right here. It's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. The pressure was so great this morning that we actually spiked the 50% fib. We've now retraced and we're above yesterday's low. Once this bearish cross up here kicked in, just like this is a bullish cross, when the red line gets below the green line, that's a bearish cross. And that tells us that we're going to see higher prices, lower prices, okay? Now, I also talked yesterday about the, come on, get out of the way, the step line, okay? If we close here today, if we close right where we were now, probably on the open Sunday night, you would see the step line cross red and falling. When the step line crosses from the left side to the right side of red and falling, you almost always get a retracement back to the BBC. And look where the BBC is sitting, at the 24% fib retracement. Now, we had a number of bounces on the 24, we had a bounce on the 38, sliced but closed above the 38, sliced but closed below the 38, plunged and closed below the 38 yesterday, but well off the low of the session. In fact, I kept pointing out this little area yesterday and how important it was, okay. Now, this area was way back in September of last year. See this little shelf across here? And look where the low came in yesterday. And then we actually closed right at that old trend line. basically open of that candle. Yeah, right there. Okay. So we've hit the 50 and quite the bounce so far. Okay. Yeah, we had a bounce yesterday, but we faded into the close. The chance of a fade today is pretty good because we're heading into the weekend. So the question is, do institutional traders want to take home open positions over the weekend? We're sitting right on top of that trend line right now. So how far have we bounced? We're currently trading 57.53. The low of the session was 56.73. So I'll let you do the math. Take 57.52 and subtract 56.73. That's how far we've bounced so far. Now, back on Wednesday, I said I'll be really surprised to see this day close green. I even posted my surprise-o-meter in the discussion group because it actually did. But a lot of good it did us because the next day just erased all of that. So how we close today, super important. Could this turn green? Now you've got resistance times 2 right here, or 3. You got the 38% fib, you got the black step line, you got red and falling. So that's resistance times 3. Is it possible we could reverse course and close above it? Yeah. And your first major resistance would be right there. And then right there. Now the path of least resistance, of course, is probably back down to the 50. So I'm not going to make a forecast or a prediction. I'm just telling you what's going to happen. Because I know what's going to happen next in the markets. I'm just kidding you. I'm just making an observation. Now, daily charts are important because institutional traders, the ones who move price because of their immense account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. I encourage you, whether you trade future stocks, crypto, Forex, ETFs, spend 2 minutes every day with the daily chart of whatever it is you're about to trade on the smaller time frame so that you can identify major areas of support and resistance. Okay? Now, if you're on a 30-minute chart, you can see the high of the day, the low of the day. But if you're on a range chart, you can't. And those are really important. Today's high is 57.86 half. Today's low again, 56.73. Okay? And on your smaller time frame, you can't see that we're sitting right on top of that trend line. So by using the daily chart, you're accomplishing 2 things. You're looking over the shoulder of the deep pockets that move price, and you're able to identify major areas of support and resistance as we do each and every day on this broadcast. Okay? So, yeah, we spiked it. Would I have liked to have seen it stop on a dime and bounce? Yeah. But it didn't. It traveled down to follow the horizontal line on the cursor. See that? We'll check back in on the daily chart before we close up. Let's go to the ES. All alerts are created on the 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose years ago. They say if it's not broke, leave it alone. So I have. Now the green line, it's called the BBC because it stands for bull, bear, cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Concept simple. Now markets are fractal in nature. Same is true of the BBC. You can put it on a 1-minute chart, a daily chart, a weekly chart. It doesn't matter. But the information it gives you is always relative to the time frame that you put it on. Okay. In other words, don't look for daily results on a 1-minute chart or vice versa. So, the ES. Now, remember back a couple days ago, we drew in this line during the broadcast, said this will be the next major potential resistance. We spiked it by a little bit, but we never took out that high. And we never closed above that high. Closed right at it on that candle. Then we had said earlier that this bearish cross would be potential resistance if the market tried to move higher. So the first move up, it hit resistance, sent it back to the BBC. The pull back to the BBC holds more often than it doesn't. So this support sent the market looking for resistance right where we had anticipated. This is what I mean about understanding how price flows. Where to look for potential resistance, where to look for potential support, how to see the windows of opportunity in between, and how to not get freaked out when you get stopped out. Because I'm telling you, you're going to get stopped out. The difference between a retail trader and a professional trader is a professional trader, when they get stopped out, they understand that that's just a part of doing business. That's a part of trading. It's as much a part of trading as breathing is a part of life. You just go look for the next opportunity. The people that drive themselves stark raving mad are the ones who can't accept being stopped out. You can drop $100 for dinner with the wife because that makes you feel like a big shot. But you get stopped out for $100 in the market, you start having very dark thoughts. You got to get over that. The vertical lines separate today, Friday, Thursday, Wednesday, Tuesday. Horizontal lines, or the weekly trading zones, they are published every Monday morning at 6:15 a.m. Eastern. Since December 14th of 2009, a little over 15 years. When price rallies up to a weekly zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. This has been an odd week, to say the least. So we opened right here last night. Remember, the targets came out 5 minutes ahead of the open. There was never any real reason to go long. Although this candle right here, 8:30 when the news came out, it shot up green. But look where it ended. Back down at the short target. Opened here, ran all the way up here, and then ended at the short target. Which is based on right here, where the step line crossed red and falling. That's an important price, important area. And important prices, important areas are almost always tested. We finally traded through. Now you'd have to go back, way back in the way back. But you can go back and look and see why there was support here. Okay. That support has now sent us up to resistance, the BBC. Remember, the pullback holds more often than not. It held, and it held. Doesn't matter if it pulls down from below, pulls up. If it pulls up from below or down from above, it holds more often than it doesn't. And the larger the time frame, the truer that is. So we came down. Buyers, again, look right, figure it out. It's part of learning to trade. Now, notice on these candles how we spiked the BBC, closed below it. Spiked it, closed right at it. Spiked it, closed back down at the target. Okay. So now we're trying once again to overcome the BBC. At one point, this was a huge green candle. It looked like we were going to the moon. Gotta wait till the candle closes. This looks pretty powerful. But you gotta ask yourself, where is the resistance? Potential resistance is right there. Right there. Right there. And after that, there's really nothing up to the long target and the weekly trading zone, 5805/5806. But don't forget, 20% of the time, the market will find resistance or support in an area that there's no logical explanation for. See, it's working real hard to test this. Now, what's this high? 57.68. What's this high? 57.78. So from that high to that high is 10 points. How many points do you need to get your goal for the day with the ES? 2. So that's roughly 57.72 up to 57.78. That right there, that's a 6-point window of opportunity. 6 points. You only need 2 to get your goal for the day. What's this high? 78.25. What's this high? This is, 58. This is 78. No, that's 68. So that's another 10-point window of opportunity. And then this high is 86. This high is, come on, 78. So from 78 up to 86, you got about 9 points up there in that window. You only need 2. And then you've got all this area right up to the zone. Okay? Now, price could march right through all of these, or it could get halfway through this one and falter. You don't know. It's knocking on the door. Now remember, we're still in a pullback. Oh, see there? little wick in there. Now, red and falling is in a position to curl up. Okay. Now remember, there was, what did I say, 10 points in that window? You only need 2. You look down here. Both the step line and red and falling have gotten directly below price. Okay. But if red and falling curls up into blue and climbing, like it did right here, then that would probably take us right through that window. All 10 points, but you only need 2. Okay. All right, let's get going. Now, what do we got? This was the open. We just consolidated sideways until the 8:30 news came out. And we don't recommend trading news, but when the news spiked, look where it spiked to, right up to the zone. Now again, the zones are published Monday morning at 6:15 a.m. Eastern for over the last 15 years. Once they're published, they're carved in stone for the entire week. So here it is on a Friday, and the zones that were published Monday morning at 6:15 a.m. Eastern. Would you say they're still working? I think so. The zone's 42,890/95. Good stuff. So we consolidated sideways. We did drop to the short target. Got a little bit below it. Now this low is this low, right? Yeah. Support will always send the market looking for resistance. Remember, the pullback holds more often than not. So we get another leg to the downside. Go look left, find out why. And we spiked the BBC. And we closed right at it with a green candle. Now we got a little double top going right here. Okay. So the next zone and the high of the day up at 42,890. So what about 42,830 to 42,850? That's enough to get your goal for the day. 42,830 to 42,850. That's probably more than that. That's 42,820 to almost 42,870. That'd be 50 points. But you only need 20, okay, to get your goal for the day. You got a double top here. If you break that double top, there's an extremely high probability you're going to make it up to the high of the session. Notice red and falling is starting to curl. And when red and falling curls up into blue and climbing, higher prices. When blue and climbing becomes red and falling, lower prices. Higher prices, lower prices. Color coded for your convenience. All right, the Russell. Here's where we open. We just, what a sleepy night. Just sideways till that 8 oh, this happened at 8 o'clock. Nope, 8:30. That's the 8:30 news. Sent us all the way up to and through the long target. And that high took out that high by how much? A little bit. 2099.9. 2100.9. 1 point. Now, what was this resistance based off of? Bearish cross. So we overcame it by a little bit, and then we came all the way back down, all in one 30-minute candle, all the way to the zone where we found support. When price drops to a weekly zone, we expect support until proven otherwise. Just like when it rallies up to a zone, we expect resistance until proven otherwise. And so from the zone, we bounce up to the BBC, we spike it, come back down, support, and then back down, support. And then we spike the short target, go look left, find out why. You got to learn to do this. The step line is about to cross red and falling. We've already retraced to the VVC. Now we're still in pullback mode, okay? There's still 3 minutes left in the life of this candle. You got potential resistance here, 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 and here. See this double top from today to yesterday. All because of this bearish cross. Okay. NQ. Here's where we opened below the VBC. Basically stayed below it. And then we made the drop to the short target. Support sends us looking for resistance, which we found. Where? Look left. See this high? $22.77. $22.73. Okay. So we got a high, a lower high, a lower high, and a lower high. Now remember, the pullback holds more often than not. So there's 2 minutes left in the life of this candle. Will we close above it or below it? Well, you won't know for a minute and a half. From 151 to 171, that would be 20 points. At $20 a point, that's $400 per contract traded. Crude oil. Here's where we opened. Consolidate. When you've got this, when you're below the BBC and then above and then below, you got to wait for some kind of trend to develop. Okay, you get the perfect stack right here. Price, step line, blue and climbing, BBC. We traded right up through the zone. Now, only 3 things happen at a weekly zone. 70% of the times consolidation, 20% of the times rejection, 10% of the times a slice. But price always moves in legs. Leg retracement, leg retracement, leg. Now this high, remember this is Friday, Thursday, Wednesday. Now, you see this bearish cross right here? There's your resistance right there. Friday's resistance from a Wednesday bearish cross. High of the session. Right there. Right where that candle opened. So a leg and a retracement and a leg and a retracement. And we're just sitting here at the weekly zone. This is the lowest weekly zone. Now we got below the lowest weekly zone way back on Wednesday. And we stayed below it yesterday. I did say earlier in the week that based on 15 years of history, The greatest probability is that by close of business on Friday, we'll be at or above the lowest weekly trading zone. Now, with price below the BBC and red and falling overhead, kind of looks like we could close below the lowest weekly zone today. If that happens, it happens. It's happened before, it'll happen again. But most of the time, we close somewhere inside the zones. But we've had some incredibly volatile weeks here of late. Price continues down. 66.65 to 66.55. Goal for the day. Again, 65. So you want to get below that low, and you want to get out before that low. 65 to 55. 10 points, goal for the day. If you're trading one contract, it's $100. If you're trading 10, it's $1,000. And the idea again is not to trade all day, but to just, get really good at one thing. Pick a market. You don't have to trade 4 markets. Mike will be the first to tell you that and encourage you not to try that. Focus on 1 market, 2 markets at the most. Get familiar with what your perfect trade setup looks like. And just do that. You're still going to get stopped out at least 20% of the time. But get really good at doing one thing, getting your goal for the day. And then over time, with the profits you earn, you add additional contracts. You start out in demo because you got to learn the strategy. The 24/20 blueprint will tell you when it's time to go live. You only go live with 1 contract. Once you're trading live, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big deal there is your first contract was funded with your startup capital, but your second contract's funded with profit you earned in the market. Big difference, right? So now you're going to trade 2 contracts for a while, which means instead of making $100 a day, you're making $200 a day. And then pretty soon the blueprint will say it's time to add a third contract. You only add 1 contract at a time. You only add with profit you earned in the market. If you have the discipline to follow that rule, by the time you get to 5 contracts, those same 2 points from the S&P or those same 10 ticks from crude are now worth $500 a day. Some people in this audience may have never made $500 a day. At 10 contracts, you're at $1,000 a day. But it doesn't happen overnight. This is no get-rich-quick scheme. This is about learning how to read the chart so that you can learn how to trade. It's pretty simple. Trading is not easy, but it can be simple. It can be frustrating. It can be aggravating. Okay? You don't have to know everything there is to know about markets and trading and blah, blah, blah. You just need to get really good at doing one thing, and that's getting your goal for the day. And you only need 1-2 markets. There's plenty of movement in the markets each and every day to get your goal for the day. And again, if it takes you 10 trades to make 2 points in the S&P, after commissions, you're still profitable. Think of it that way. You have 10 trades every day to reach your goal. Some days you'll get it in one trade. That means tomorrow you got 19 trades available to get your goal. And if it takes you all 19 trades to get your goal, after commissions, you're still profitable 2 days in a row. Now, if it takes you 19 trades to get your goal for the day, then you definitely need to book a mentoring session so we can try to help you out with, whatever's going on. Because something's going on. Now, crude, it looked like the bottom was going to fall out. Now, what's it doing? It's just sitting right on top of that lowest weekly zone. 6690/95. Again, all the zones are published Monday morning, 6:15 a.m. Eastern. And once they're published, they're carved in stone. And notice how once we got below the lowest weekly zone, we kept coming back to it as resistance, 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 until we finally broke through. So based on the last 15 years, we expect that price will close at or above this lowest zone. And if it doesn't, it doesn't. We're not going to go back to the drawing board after 15 years. We're not going to do anything different. We're just going to keep doing what we've been doing. Gold. Here's where gold opened. Remember, everybody had the targets 5 minutes after the open. And we pretty much dropped straight to the short target. Okay. There's about $800 in there. So the market found support. Look left, please. Support sends us to resistance, which sends us back to support. We overcame resistance. Right here we consolidated at the zone, had the perfect stack, price, step line, blue and climbing, ran right to the target. Now this target was based off that high. Okay. If you got in on this candle, it's 2924.8. Let's just call it 2925. $400 per contract traded up to the target. But it kept going all the way up to 31.2. So that'd been another couple $100. When the market finds resistance, it's going to go look for support, which it found at the zone. Support sends it looking for resistance. Now, we would expect resistance here, possibly here, but it failed. Sign of weakness. Boom. Factors even like a head and shoulder. The neckline would probably be, if you were gonna, we're not really pattern recognition people, but neckline. So price gets below. And now, if we get a retracement, which we may not, we may continue right on down to the short target. Silver. Here's where we opened. Supported the zone. Bounced us back up to this high, which failed to take out that high. Sign of weakness. Price gets below the BBC. Blue and climbing becomes red and falling. Where does it take us? Right to the short target. And then we find support here. See that low right there? support, sends us all the way up to resistance, back down to support, low of this candle. Bounces up, sends us back down. Now we're climbing back to the VBC. This is the highest weekly zone for silver. We've been above it for a couple days, but today's Friday. So based on 15 years of history, we anticipate that silver will close today's session at or below the highest weekly zone, even though we've been above it for 1, 2, 3 days. As price rises, remember the pullback holds more often than not. Could it trade through it? Sure. You have to embrace all possibilities. So back to the daily. Look what we got. Now that's a bounce. That's a real nice bounce. This thing turns green. I'll publish the surprise-o-meter once again. It's so close to doing. I guess I just want to really post the surprise-o-meter. We're sitting right on top of that trend line. But price really looks like it wants to move higher. Oh, remember these? Remember that was a 10-point window? You only needed 2 points to get your goal for the day. Well, there was 10. And I think we said you got another 10 over there. And then above that, you got another 9. But you only need 2 a day. Okie doke. That's all the markets. To become a member, email us support@cfrn.net. In the subject line, I want to become a member. Body of the email, name and phone number. We're not going to call you, but we are going to send you an email that explains what it means to become a passport holder. Things like 2 hours of live training every trading day with audio. Now it's an interactive environment, which means you're watching real trades in real time with an explanation of every move, every trade. You're trading along in your demo account so that you can learn the strategy and qualify to go live. And you're answering every question that pops into your head. 9 out of 10 new traders don't have that. You need a teacher. No matter what career path you choose, you need somebody to teach you how to do the job. So, the problem that 9 out of 10 new traders suffer, we plugged that hole. On top of the public training, the group training, the interactive environment training, you get private one-on-one mentoring. No extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. You also get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published every evening. On Monday mornings at 6:15 a.m. Eastern, you'll get the weekly trading zones. And again, once they're published, they're carved in stone for the entire week. And you're able to attend the members-only workshop every Thursday night. And on top of that, you get the golden key that opens all the private channels in Telegram. We got public channels, we got private channels. Once you become a passport holder, you'll have access to everything. Everything a trader needs, all under one roof, one low price. lives. Let's wrap this week up with our good word for the day. What do you say? Yesterday we talked about keeping hope alive. Today, God ideas. Ever wonder if you could think like God? Jesus said he would renew your mind. 1 Chronicles 28:11 and 12. David gave Solomon the plans of all that the Spirit had put in his mind for the temple of the Lord. The first Jewish temple ranks as one of the architectural wonders of the ancient world. It was built in the 10th century BC, and the project's scope was so massive that Solomon employed 30,000 loggers and 80,000 stonecutters. More than 3,000 foremen managed the 7-year project. The temple was the epicenter of Judaism. It was the place of sacrifice. It was the place of worship. It was the place of pilgrimage. But like everything else, the temple was once a figment of the imagination. Everything begins with a thought. The cumulative history of the Jewish temple can be traced all the way back to an idea in the mind of King David. But it wasn't David's idea. David gave his son Solomon the plans for the portico of the temple, its buildings, its storerooms, its upper parts, its inner rooms, and the place of atonement. He gave him the plans of all that the Spirit had put in his mind for the courts of the temple of the Lord. 1 Chronicles 28:11 through 12. We have no idea how God downloaded the plans to David. Was it JPEGs or PDFs, mental images, detailed drawings? One thing is sure. The plans for the temple were not manufactured in David's mind. They originated with the Spirit of God. The temple wasn't just a good idea. It was a God idea. So ask God for an idea. Pray for a plan. Why? 2 reasons. First, because the Bible says, "Take delight in the Lord, and he will give you the desires of your heart." Psalm 37:4. Second, when something is conceived by God's Spirit, it is sure to succeed. Yeah, Chris, it might have just come in a dream. You're absolutely right. And that, friends, is our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. 3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.